So you don't have any money and you want to buy a house? Then you definitely want to watch this show.
No problem.
Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
Hi, and I am DeLynn Gaston. Thank you so much for...
I was wondering if you were going to interject.
So you didn't give me... Did I not jump in fast enough?
No. All right, go ahead.
I am DeLynn Gaston. Thank you for joining us. Sorry I didn't come right off of his words there.
That's your cue. Every week we do this show. I'm Barry Horvath.
Did I not come that fast?
You're DeLynn.
I'm a little tired today, okay? So maybe I'm going just a little bit slow.
Post-election blues. Or reds, depending. Oh, that's another show.
That's funny. That was good.
We got some great information, though, this week.
We do. So a couple of really cool things are happening.
Oh, sure. I talk about mortgages and lending.
and
you perk up. You're like, oh, good.
How sad is that?
Do you have coffee?
I do. I have plenty. I have a nice full cup. See my Wonder Woman cup. Because he doesn't like when I put like Starbucks or Dunkin' Donuts. So I have my Wonder Woman cup.
Sorry.
Yeah.
They're not paid sponsors, are they?
No.
Anyway, so we're going to talk about some programs that may be helpful to you if you have no money or very little money and you still want to buy a house. Because we all know, I keep looking at statistics, rentals continue to climb. And although it looks like the housing pricing is leveled off just a little bit, the cost of rentals has not. And I know a lot of people could potentially own for less than they're paying in rent. Paying in rent.
I know.
And not just that, but I know some people don't want the responsibility of homeownership. But remember, when you lock in a mortgage, you're pretty much locking in for the next 30 years per se on what your payment's going to be.
Right.
Outside, taxes can go up, insurance can go up, and they're gonna. But your mortgage payment itself is going to maintain constant.
And you know what's funny? People say, well, I'm not even going to be alive for 30 years or whatever. They're not going to give me a 30-year mortgage. Yes, they are.
Yeah,
First of all, it's illegal for a lender to discriminate against age. So you could be 99 and we can give you we have to give you a 30-year mortgage if that's what you apply for and you qualify for it.
Because we don't want to give them a 15-year because they probably wouldn't qualify anyway. I'm just saying, just being real.
So first of all, there's that. But then people say, well, I'm not even going to be alive that long or whatever. So why wouldn't you want to make sure that your payment's not going to change? As you do get up in years, you want to make sure that your mortgage payment's not going to change. And with rent, it can go up every single year. And it will. It absolutely will. So, now is the time to lock it in before things do go too crazy.
Plus, the pride of home ownership. And, the other thing, I know this isn't why you should buy a house show, but But
we're doing pretty good with that.
We're doing pretty good. Pride of home ownership, stability. Your car insurance rates can actually be less if you're a homeowner versus not. Kind of like being married or single.
Right.
They tend to think for whatever reason you're more stable when you're married.
When you're married and when you're a homeowner.
Exactly.
They just do.
They just kind of go hand in hand.
Right.
I think the risk associated with, insurance is risk-based. So let's talk about some of the programs where you can get in.
Yeah, so we really didn't mean
with
to
no
get
money.
into. Look who we're telling. We're telling the real estate
community they should buy a house. But you know what?
They already know that it's a great time to buy a house.
Sometimes we forget. Maybe you want to share this with your potential buyers out there.
Right.
Why should they? And there's loan programs. We're going to cover some niches on how much you're going to need down, different programs that are available that you may know about, may have forgot about. And things are changing all the time. So just going to hit some program highlights on what's out there right now. And my very favorite is our first one because it's no money down, essentially. It's called the USDA loan. I can't even say it. Can you say that 3 times fast?
I can. USDA.
No. Loan.
No, probably not that.
That's so funny. So one of the big tangible benefits of the USDA loan, it is 100% financing.
No down payment.
So, in fact, not only is it 100% financing, but it can be more.
Right.
You know.
I know. I thought that was cool. So some of the highlights of the USDA program is, as we said, no down payment. But and as you know, as you realtors anyway know, that there are income restrictions with that, and there are property restrictions. The key word is rural housing. USDA is for rural housing. So you're not going to get this in Pinellas County. You're not going to get this in Miami-Dade.
Right.
There's certain parts of the state that you're not going to be able to get USDA financing because it's just not rural.
It is definitely restricted by geographical areas.
Right.
And if
it's the easiest thing to look up.
Yeah.
It is the easiest thing in the world. You just have to Google USDA property eligibility. That's it. And it brings you right to a map of the United States. You type in the address.
It goes to the USDA.gov site. Don't get sucked
You don't
into
even have
an
to look around,
advertisement.
though.
Yeah. And it brings you right there.
Right there. A map of the United States. You type in the address and it tells you yes, no. If it's in USDA
And
territory.
you will be surprised, some of the mapping is pretty old. So some of the more populated dense areas, like I know in Trinity, the Trinity Corridor, east of Little, is still USDA approved.
They did update it recently, but there are still definitely some pockets right here in Pasco County that are USDA.
And unlike FHA, where you have the monthly MIP, you know, they charge a one-time fee up front.
Guarantee fee.
And
which
you're
is financed in.
And you're kind of done.
And
there's no mortgage insurance. What does that mean for you? Lower payment.
Lower payment.
And more qualification.
That's a good thing. And less down. So the other cool thing that we were talking about that I really like about the USDA program is, and you real estate people, you will know this. So if you're selling the house for, let's say, $150,000, but it appraises at $155,000, we can actually finance in, normally they say purchase price or appraised value, the lower of the two, and we cannot get more. So if we were doing a $150,000 loan and it appraises at $155,000, we can actually finance in some of the closing costs and such. We can go up to the appraised value, not to exceed 105% loan to value. So that is very cool right there. That can help out a lot of buyers right there, because normally they are, that's the hardest thing is down payment.
Seller concessions and so forth for somebody with no down. Now remember, there are income limitations.
Right, and they just changed those. They increased them.
And it's actually based on the number of people in your household. So right now, if you have 1 to 4 people in the Pasco County area, per se, and Hernando, and most of the the local
in our area
counties in this area, it's 82,700 is your cap. But now that means everybody in the household's income combined cannot exceed that amount.
Right.
If you have over 4 people, which is 5 to 8, it actually goes up to 109,150. So that's the cap allowed on the program. So if you make more than that, and USDA may not be for you.
That really just changed, because I had a client just recently. They waited until their baby was born.
Really?
And that gave them 5 people in their household.
So they could qualify.
Right, and at that time, I want to say it was like 80,000. It was only like a year or two ago, and it was like in the 80s was that number.
Right.
So it's really gone up quite a bit lately.
And remember, you still have to qualify this loan. You still have to debt ratio. You still have to have qualifying credit scores, usually 620 or greater. But we got more programs like this that we want to share with you with no money down or very little money down right after this. So stay with us.
Hi, I'm Jerry from Hot Locks Hair Salon. We are conveniently located at 13414 US Highway 19 in Hudson. I've been a local hairstylist in our community for the last 34 years, 7 of which I was an educator. Our passion is the artistry of hair, and Hot Locks is here to help you achieve your perfect image. You can call us at 727-514-9978.
Okay, we're back with some great loan programs that'll help you qualify or possibly qualify with little or no money down. So, back in the old days,
now
people
you
thought,
sound tired.
I'm tired. Excuse me just a minute. Coffee break.
Perk it up a bit. I know, we
It's
don't want
so
you just
much
going to
better.
sleep.
So much better. You know, if people watch the show like ours, like you ever watch the news, they're all so stiff. They sit there and they go, and they're reading
And then
the
there's us.
teleprompter, and they got the wires coming out, and then there's us. We're like so
Then
laid
there's
back.
us.
We're so cool. We're fun. We want to give you great information, though.
And we do.
Yeah, and we don't.
And did I tell you I had somebody call me this week because see this on our moving forward TV under
see
there?
your
That's
leg?
my foot, and apparently I used to. Yeah, see, and
You
there's
shake it.
yours.
See, I keep mine up on the rail, so that's why they call
Well,
it.
I am now.
Well, thanks for the tips,
By the way,
folks.
did you know that your foot? You know, you can say your
So
foot
send your
moving.
tips in
Whoops.
and let us know what you think of Moving Forward TV, right? You can find me or DeLynn anywhere. All right, let's talk about the next Lowdown program. Then, you know, actually, probably the most popular loan going right now is the FHA loan.
And it's one of the best. And what we want to say is don't be afraid of it.
You know, it's
so
so
many
funny.
sellers are afraid of it, and real estate professionals
You're
are
right.
afraid of it. Don't be afraid of it. It is one of the best programs out there right now.
Why do you think they're afraid of it?
I don't know.
I know why.
Why?
Because they think of the old days where
Yes.
FHA required special inspections.
And takes longer. It
and
doesn't
takes
take any longer.
You know,
Does not take any.
You know,
Same turn time.
the appraiser's not going to like it. No, it's not that way anymore. FHA is competing with Fannie and Freddie for business. They
Right.
want the loans. They make money on these, make no mistake, or they wouldn't do them.
Right.
Okay?
Right.
And an FHA loan is a government guaranteed loan. So what does that mean?
So FHA does not make the loan, they just guarantee it.
yeah, and that's the key to it. So,
Right. But it's their guidelines that all the lenders have to follow.
yeah, so there really are no guidelines. We all create our own. It's true.
We don't believe. Don't
All right, there's
listen
certain
to him.
guidelines. You know what's so funny? There's one part
I have
of
an
FHA.
FHA book on my desk that will differ.
Well, there are guidelines, but there's no credit score requirements per FHA.
Right.
All right, so what do you got to say to that, DeLynn?
Okay, so but let's
Uh-huh.
clarify. Let's clarify. So there might not FHA might not have any credit score requirements, but every lender
Okay.
does.
What did I just say? We create our own rules. Now come on. Now argue
I
with
know where
me.
you're going with it.
So most lenders will have a minimum credit score of 580, 620, some are even 640, but FHA has no rules on
Right.
credit score. So anyway, FHA low down again, 3.5%.
And it's been that way for a long time.
Yeah, so 96.5% LTV. The one other appealing part of FHA, like USDA, we talked about, well, you could factor closing costs on the loan. FHA up to 6% can be paid by the seller. So on a $100,000 purchase, in layman's terms, negotiated in the contract up front, a seller can pay up to $6,000 of the buyer's closing costs and prepaid payments, which can essentially allow you to get into the house for less money.
Right. The other thing that we like about the FHA is that they are definitely more lenient on credit. So if your clients do have maybe some lower credit or some past histories, a lot of people do.
If they have credit boo-boos.
And even if they're old and people say, oh, I can't, I got too many boo-boos. Not necessarily. FHA is a lot more lenient than conventional
And why
is
is that,
on things
DeLynn?
like that. Because it's guaranteed.
By the government.
Yes.
So your taxpayer money is funding this loan, guaranteeing it anyway.
So FHA is
Man,
not a bad.
That made you really quiet.
FHA is not a bad loan, and I just think that it gets a bad rap and everything.
I agree.
Now, there are a couple of extra steps that the appraiser has to do, but that really doesn't have anything to do with anybody else.
Not anything to do with the realtor or the buyer.
I know, and that's the other thing. They say, oh, well, FHA is too strict on the appraisal. Let me tell you something. Conventional's kind of strict these days too.
Yeah.
There was too many houses. After the real estate, the crash happened. There were too many houses that were just trashed. They were just, people as they were being foreclosed on and as they were moving out, they were just destroying the house and ripping everything out of it. So even conventional got pretty strict on appraisals. They backed off a little bit. as has FHA, but we're not really seeing anything, major that we used to see before, are we?
Nope.
I mean, they're coming in pretty good. It's fine.
If the house is priced right, the appraisal's going to come in.
Right.
That's the bottom line.
And without, it's still, right, FHA still doesn't like peeling paint, so if there's paint peeling somewhere,
Right.
Just get a little paintbrush and dab that on up before the
And they
appraiser
don't like
comes out.
fixtures exposed with wires or anything.
But conventional doesn't
like
either.
it
They don't like it
I know.
either. If there's wires hanging, that's a problem.
Yeah, it's really a misnomer
Right.
on all
So
that.
don't get too worried about the FHA appraisal. It really is again, a lot more lenient debt ratio. They allow the debt ratio to go much higher.
Up to usually are over 50% now.
So with conventional, the debt ratio, they don't like that to go above 43%. Can we push it a little bit, sometimes to 44, 45, maybe over 45? If you're at a minimum down payment of 5%, let's say, over 45% debt ratio is not going to happen. No matter how good your credit is, it's very difficult to get that
And FHA
through.
doesn't really care about medical collections either. So
FHA and debt ratio, we can go, like you said, over like to 55. And the collections sometimes don't have to be paid off, whereas conventional is a lot stricter on that. And FHA's rates, interest rates, are lower than conventional interest rates.
And the other reason you want to consider FHA, you just had one this week, remember, with the MI. FHA
I was just
MI,
gonna say that,
I knew you would.
right.
FHA MI is 0.85 on any program.
Regardless of what your credit score is.
And regardless, you could have a 580, get an approved eligible, it's 0.85.
Right.
Conventional, it's going to be much higher with the lower credit score.
Right.
So you need to weigh that out
Right.
with your lender to see which way makes the most sense. FHA does give a slight deduction if you put 10% down or more, but you still have MI. So where on a conventional, you put 20% down, as most of you know, there will be no mortgage insurance, which adds to your payment,
Right.
lower payment. But you know what, Gordon, look at all your options.
On the difference between the conventional and the FHA that I was doing earlier, it was over $100 difference in payment. But FHA was the better way for the client to go because of their credit score. Conventional, the mortgage insurance, the PMI was going to be much higher than an FHA loan, over $100 higher.
That's crazy.
Yeah, it was quite a difference. So it was a no-brainer for the client. They said, "No, let's go FHA right away."
Right.
So
it's a great loan program. Look at that option. We got a few more options too.
I know.
But you know what? Before we do that, this week,
Yeah.
nah, we'll do that next week. Never mind. We're going to break first. We got more information
I don't know
coming
what he's
up.
talking about.
Just hang on. We got some more low-down programs that you may not know about. We'll be back right after this. All right, we're back with some more great information on low money, no money, zero money, little money, got more money, down payment programs.
We didn't say on the zero down, no
Right.
down payment programs, VA, but everybody already knows that already.
Well,
and that's
yeah,
kind of like
and
a
VA is
different
another
animal.
option.
Right. If
But
you are a veteran.
If you're a veteran, you
no
may
down
want to
payment
look at
needed.
it, or if you're a surviving spouse.
Of a veteran, yeah. We
a
probably should do a show on VA. I think that would be a good
whole show
idea.
in itself.
I think that's a whole show in
Because
itself.
100% financing, one-time
A lot
fee
of
up
good
front,
highlights on it.
depending on how many times
But
you
there's
used
also
eligibility.
there's also a lot of
bigger
mystery.
loan sizes.
There's a lot of mystery surrounding
Right.
that and a lot of misinformation out there
Yes.
about VA. So
You know,
I think
all right.
I would like to do that.
So let's talk about two other options. We have conventional. So let's pretend you got somebody with really good credit and needs low down payment. And maybe, remember now, we didn't mention this, but FHA does have loan size limits.
Right.
And depending on your geographical area, determines what's the loan size limit for FHA. So conventional may be another way to go. And conventional still has 3% down options available.
And normally what we do is we weigh it out. When when somebody first calls us and we're going through our questions with them and such, we're weighing out which way would they be better geared to go.
What's best for the borrower?
What's best for the borrower? Which way do they fit better in? So on Fannie Mae and Freddie Mac conventional loan programs, both of them have a great 97% program, so only 3% down. But there are certain restrictions, and there's a couple. They're very similar to the programs. There's a couple of little differences in them, but we just wanted to kind of touch on some of the highlights of them. They do have to be owner-occupied properties.
So can I tell you the names of the programs?
No rentals, no investment property.
So there's no mystery, because I've seen,
Yes.
you know what's so funny? I've seen lenders like kind of disguise the name
I
of
know.
them
They
and
put
twist
these-
it around
they put
and
these
make
little
it sound
cutesy
like
names.
and like they have this unique program. You know what? Anybody that's a seller to Fannie or Freddie has this program.
Right.
Whether they use it or not, know about it.
I know.
It's a whole nother story. So you got Home Ready.
And these
you
are
got-
the names Fannie and Freddie named
Yeah,
them.
and there's Home Possible. That's the real name. And Freddie, you ready for this? Freddie's going to change the name of their program. You know what they're going to call it?
What?
Home One. So, for you baseball fans, we all know what a Home One is, okay?
Hey, this program's I wonder if they thought of that. This is a
For
home
baseball
run.
players. So, yeah, for the Home One.
Home run, home one.
I like the way I say better.
That's right. Of course you do. It's such a goof. All right.
Listen, if you can't have fun in life, why we live
I
in
know.
it?
So on to the program
Because if you
highlights.
live in the mortgage business, you're going to cry.
Yeah, you need as much fun and laughter as you can get.
So let us have 30 minutes of fun on your time and just go with us, okay? Anyway, so let's talk about the two different Fannie and Freddie. What's the big differences? Both 3% down,
well,
both
let's
allow,
just hit the highlights of the
both
of
allow
both
seller
programs.
contributions towards closing costs. 3%
But
on
it
both.
is limited, so this is one of the places where we sit here and we weigh back and forth between conventional and FHA. Do they need a lot of closing costs covered, or do they have most of it themselves and they need the seller maybe to pick up some of the closing
And
costs?
in this market, a lot of the sellers are not willing to pay closing
Yes.
costs on sellers' behalf.
Yes.
You know, that's just reality.
I know, it is. Now, the other thing about this program is it is only for single-family condos, PUDs, manufactured housing. So it doesn't like co-ops, at least Fannie doesn't. Freddie's okay with it, but it does not like multifamily. So 2 units, 3 units, 4 units, that kind of thing. It's not going to like that. Single-family only. And as I said, does have to be owner-occupied. They do allow the non-occupant co-borrower. So if you have somebody who's buying and mom or dad needs to co-sign with them,
To help them qualify for the loan.
right. Fannie allows that, Freddie does not.
Can we, one little thing on that, because people have called and they have credit challenges, credit boo-boos.
Yes.
And they think they'll add a co-borrower and that's
Yes.
going to make them better. And
No.
it doesn't, because we're going to go by the lowest middle score of everybody on the loan.
Keep in mind, I know that this is something that comes up frequently. Keep in mind that a co-borrower does not do anything about fixing your credit. The only thing a co-borrower is for is for qualifying. So if you don't make enough money and we need, mom or dad's income as well, something like that, or a co-borrower's income, that's all it's for, is to qualify to make enough money. Does nothing as far as credit goes.
Speaking of income, Fannie and Freddie both have criteria on income limitations.
Yes.
Now, there are certain areas that are, what do they call those areas? So in there, they allow unlimited income. There's certain areas where they're under, is it renovation areas? They have a certain name for it. I can't remember
I don't know.
what it's called.
I know
But it's
under
on
the
map.
disaster area, everybody was in there
They were
for a
waiving
while.
it. So,
Yeah, they were waiving the income restrictions.
But they do, you have to go on their website. If you're not sure, we can do it for you.
I was going to say, again, very easy to look
Yeah,
up, and
so
it just
easy.
tells you what the income restriction is. As soon as you type in the address of the property, it tells you the income restriction on this is $63,500 or whatever it might be.
Right.
That's what it was, the last one I looked
All
at.
right.
So there are income restrictions with this one. So it is for the not lower income people, but you can't make a whole bunch of money and get into this with 3% down. What are some of the other cool things?
Multifamilies allowed on Fannie, but not on Freddie. So if you're going to buy a duplex and you're going to move in the one next door, Fannie will do it, Freddie will not. So
Right.
let us decipher that, or your lender decipher which program's going to fit.
Minimum credit score on both programs is a 620. They have minimum credit scores.
Yes,
so
they do. Yes, they do.
Both of those do.
So many.
But the debt ratio is allowed to go all the way up to 50%, some of the cool stuff. So again, we can go all the way to 50% debt ratio with this, and reduced mortgage insurance. Some of the mortgage PMI companies out there are doing reduced mortgage
what?
insurance with this. So
much
a little
to
bit
cover.
lower.
We could quote guidelines. We could have
I
a
know.
2-hour show and put all of you to sleep.
Bottom
So,
line is this is a great program, so
yeah,
don't
check it out.
Don't discount
Check
it.
with your lender. Ask them about it. Say, Barry and DeLynn said we had this great program. And if they don't want to talk to you, we will. Just saying. Anyway, let's talk about any community events going on.
We have community events going on.
We always have something going
I know.
on. Always something.
The West Pasco Business Association,
Yes.
WPBA.biz.
Our good friends. And you know what? They were nominated this year. Actually, they won an award from SCORE. Oh, I'm not supposed to announce that yet. Did we get it yet?
I was going to say,
All
how
right.
come I don't know this?
Oh, you don't? All right,
Maybe
I'll
that
tell
was
you-
the thing he was
I'll
going
tell you
to tell
about
me.
it. I'll tell you about it next week's show.
Okay, next
all
week's show.
But we do
Hey,
we do-
good for us.
Yeah, so really,
Nice.
really proud to be associated
But
with
we've
them.
also been nominated by the for the chamber to
Yes.
nonprofit of the
But
year.
this
So
is an
anyway,
award
we're
by a
going
bigger
off on-
organization that we actually won. Forget nominations.
So the West
Tell us
Pasco
about
Business
the Grinch.
Association, our networking and 501c3, has an upcoming event, as we do every year. This is our 8th year doing this, and this one is called How the Grinch Saved Christmas. You've heard us talk about it before in the past and past shows and such. It's a great fundraising event for local community, local families right here. We raise funds. It's a huge event. It's a big dinner at Spartan Manor, and it's a sit-down meal, and it's baskets,
Live
raffles,
musics.
and dancing and
It's a
stuff
lot
like
of
that.
fun.
It's a lot of fun.
And you'll get to meet
And we
the
raise
families.
lots of money for local families who are struggling right now and
Need our help. for the
probably
holidays.
for no fault of their own, would not have a Christmas if it wasn't for the efforts of our West Pasco Business Association members.
What a great event. Go on WPBA.biz or WPBA.rocks. Check it out. Get your tickets right now. The first 100 tickets, which I think are down in the 60s now.
Yeah, they're kind of going.
And they're are at $35 if you want the pre-sale pricing. Go
And
online.
we always sell this event out,
And it
so
does
you
sell out.
definitely want to.
And a great way to network.
December
too.
14th, did you
Yep,
say that?
I
It's a
did.
Friday night.
Go on WPBA.biz.
Yes.
Book it. There's still some sponsorship opportunities if you want to get involved and help us out.
We
and be a
always
part.
need help. We always need volunteers. So if you want to help out,
You know, it's good.
Come see us.
Anyway, great information this week. Can't
I
wait till
know.
the Grinch. I'm so excited about my favorite event of the year.
I know.
You know, a lot of
favorite
prep
event, yeah.
and good. So share our show, like us. We're out on LinkedIn. We're on Twitter. We're on Instagram.
We're on all those
Facebook.
things. And
We're
if you
on-
don't see us on something, let us know. And
Yeah.
we'll put our show there
and if
too.
you got this via email, do us a favor. Forward it to someone who can use
That's right.
to be entertained by us.
Forward it to forward it to your potential buyers. Forward it to your sellers so that they know what to expect
Yes.
as well. We appreciate you guys watching. We are today and every day.
Moving forward.
We'll see everybody next week.
Yes, have a great week, everybody.
Bye bye.